Uh, Thank you very much, and thank you all for all of you here who've obviously finished lunch quickly and are encouraging all of us here on the stage with your presence. So we'll try and make this conversation interesting, informative, and also, hopefully a bit edgy, so that we can really get some good insights from what I think is extremely diverse range of stakeholders who are really interested in this whole space of getting Bharat to bank digitally, readiness of BCs, MFIs, Fintechs, and large lenders. Um, you know, you, I think you already heard who, the panelists are, but I just wanted to just take one quick second to briefly just mention we have Dr. Bakhshi from, Bill and Melinda Gates Foundation. We have Mr. Kulkarni from the BC Federation of India. We have Shalabh from Spandana, Sphoorty, Amit from OneStack, and Sanjib from iServeu. All organizations which are dealing in this particular space, at an extremely intimate level. So we do hope we're going to have a very engaging conversation. So we are really going to structure this conversation of the next 35-40 minutes around 2 or 3 broad heads. I think the first one is really going to be around this whole space of rapidly increasing digitization which is happening. It is happening in an urban space. It's now increasingly happening in Bharat. So really, what kind of opportunities is it creating for different stakeholders in the system is, I think, one broad head I want to cover. The second one is really going to be challenges, because the challenges could be operational challenges, the challenges could be compliance, they could be regulatory in nature. So I just want to speak a bit about the challenges. And I think the third thing that I really want to cover is really, how do we take this beyond a focus around lending? Because lending has always been kind of the engine of a lot of the digitization efforts. At best, we may have added a little bit on the liabilities, and that really becomes a significant focus of digitization. So how can we sort of move beyond that? I would broadly like to sort of cover these 3 heads and maybe hopefully have some time for questions. So maybe what I want to do is I want to start with you, Dr. Bakhshi, and just maybe as an organization which has been kind of having a bird's eye view of this space, possibly as a facilitator, possibly as someone who's been providing catalytic capital for a variety of initiatives. How do you really see this entire space of digitization building up, in terms of both literacy, readiness, opportunity? So maybe we just begin with you sort of setting, if I may say, a 50,000 feet view, and then we'll kind of take, the issues to different people on the panel. So over to you.
Thank you, Ram. So you've gone and decided already that you want me to speak for, I think the rest of a couple of days, right?
No.
Because it can't be a short answer, right? But having gone and said that, I think we must, as you rightly said, a bird's eye view. You must understand what India is trying to do. Right, in terms of the digital public infrastructure is created, whether it's ID and payments and what its innovations are being triggered on that. We must understand one that the folks we care about and the most vulnerable people are the farthest away from the center, right, or the cities. So they are most difficult to get, most expensive to get. And therein lies the story of why the digital is important, because nobody else would go out and reach out to them.
Yeah.
As an example, when we started off in 2008, 2009, when ID was coming up, the cost of KYC for a customer alone was about $10, right? At $10, no bank would want to onboard a customer, because that was only KYC cost. If you added other costs of doing that, it was about $25 to $30 a person.
Right.
No bank would be interested.
Got it.
And suddenly, after we had an Aadhaar, the cost of KYC dropped to 10 cents, right? And suddenly the entire base was profitable, right? And then you got the payment system to happen and everything else happening around it. So what we are seeing is the magic which got created just because you had the digital ID system, and the digital payment system is where it revolutionized the entire ecosystem.
Right.
I also want to highlight a couple of other things, right? So what the digitization is trying to do is do a decoupling of traditional activities. Earlier, the bank used to hold the money and the
Yeah.
bank was responsible to move the money.
Yeah, yeah, yeah.
Today, the bank holds the money, but there are other people who move the money,
Correct.
right? In the case of UPI. Same with ID. The institution used to hold the ID as well as hold and be able to do it, and the customer needed to do it again and again.
Right.
Now you got it at a central place where you can do a ID transaction happening across the board. So all this is changing,
Right.
And what this is allowing is to incentivize innovation to happen.
Right.
A lot of people here are in that space now. You know, whether it's an NBI, NBFC, MFI, or other fintech players, are innovating on top of that to be able to deliver this.
Yeah.
Now, this is really interesting, is because we know that the maximum amount of benefit which accrues to a customer is to a poor customer who has no choice.
Yeah.
For all of us here and in the in the audience here, we have 5 or 7 or 10 options to transact and do stuff. But that is a poor woman there who has no option, and for her it changes the entire way she transacts with the ecosystem.
Yeah.
But having gone and said that, there is a challenge of literacy, there is a challenge of digital literacy, there is a challenge of agency and control of the money for her. There is a challenge in terms of the mobility, which the BC world is trying to resolve. There are lots of these things which are in play.
Yeah.
And I think it's really, really important for us to be very thoughtful about what problem are we trying to solve for.
Absolutely.
So I'm going to stop there.
Got it.
And I'll intervene at any other point.
Thank you, Dr. Bakhshi. And I'd just request, in the interest of time, for everyone to try and kind of. So maybe I'd move to you, Sunil. And really, I think what Dr. Bakhshi said is, someone's having the money, someone's moving the money. You guys are very, very close to the ground. Just give us a sense of how you are seeing this. Is this becoming a larger opportunity, or is there a potential for disintermediation of traditional players who've been very intimately engaged with people on the ground? So maybe some thoughts from your side, and then we'll quickly move on to other players who are here.
Yeah. Yeah, thank you, Ram. If you look at the India versus Bharat landscape, as you go from urban to semi-urban to rural, the digital payment go from high to medium to low. As you do that, cash goes from low to medium to high.
Right.
So what happens is, if we are able to merge the two, and that's why I think if you look at the Nandan Nilekani's report on deepening the digital payments, he has mentioned that, cash is the safety net. Because if nothing is there, cash is there. So that safety net has to be closer to the customer, and that's what has happened first by bringing the bank account opening with Jan Dhan, then by bringing the BCs. The moment now everybody knows that you have money available at a distance which is less than 1 kilometer, which was earlier 50 kilometers, it started bringing savings into the bank account. Right. So now you see 1.8 lakh crore just on Jan Dhan account savings is. Right. And if you look at total savings of all of us put together, you know what that number is? That number is 25 lakh crore. Absolutely. And today's budget, when they said that they removed the exemptions, etc., because the tax savings scheme, etc., that our revenue secretary mentioned that the total value of that is only 4 lakh crore. Right. So if you look at the total transactions that are happening today, because of India Stack, which Pawan mentioned, we have made the entire banking interoperable and going beyond the branch to branchless banking. Got it. If we bring this, now you have 30,000 crore rupees worth of cash out happening every month, which is 10% of all the ATMs put together. Right. All the ATMs which have been built in the last 50 years. So I will very quickly first say that this particular setup has been made, and the only way it can be further leveraged is now there is a safety net. You bring on top of that all the services besides lending, right, because lending is not the mother of all. Correct. Besides lending, you have so many services. I'll talk about that later. Yeah. But I'll stop here and let others talk about it.
Yeah. Maybe just one question, Sunil, just off the cuff on this one. which is really the fact that as digitization increases and as people get more comfortable transacting digitally, do you see the role of the BC fundamentally in some fashion transforming? It may not happen immediately.
No, it will happen.
But you are seeing rapidly increasing comfort with people moving, money digitally, purchasing and selling digitally. So how do you sort of see that piece?
So the most fundamental portion that BC is today carrying is that if there is a transaction failure on UPI, you go to Google Pay or Phone Pay, or whom do you go to?
Got it.
You can't.
Right.
So for bulk of the people, I'll give you again statistics because I talk numbers only. All the UPI put together, the total number of cashback that has been given in the last 2 years is close to $1.5 billion cashback.
Right.
Basis that, with this much amount of activity, we have right now around 150 to 200 million UPI monthly active users.
Right.
WhatsApp has 550 million monthly active users,
Right.
which means 400 million users have smartphone, have mobile data enabled, but they are not transacting, or they have transacted once and now not transacted beyond that.
Right.
So what will happen is that the neighborhood BC becomes your trusted person, because anyway you are trusting him for variety of services.
Right.
He is not the only guy who is doing cash in, cash out. He is doing variety of services. So this becomes a starting point for real amount of branchless banking to take place there besides cash. Because right now the killer app is cash. But it will go beyond cash, and that's what I'll talk later.
Got it. Maybe Shalabh, we'll just move to you. And I think NBFCs, NBFC, MFIs are, have been kind of on the lending side particularly very closely engaged with Bharat. How do you see this sort of changing, especially with digitization? Because as again Dr. Bakhshi said, there's someone who's having the money, there's someone who's moving the money. The pipes of digitization can also allow for a lot of disintermediation to happen as you build more sophistication in getting to know the creditworthiness of people. So do you see, how do you see your model over, say, the next, 1 to 3 to 5 years?
Good afternoon to all of you. I am a part of the microfinance industry. I don't know how many people would know, but just to throw some numbers. We are a 3 lakh crore industry. Add 1.25 lakh on the SHG side. So we, as an institution or as a group of companies, it is 4.25 lakh crore, industry that we are talking about. The microfinance industry per se is a 60 million customer base in a nation of 1.37 billion. So that's the headroom that is available for practically, each of the initiatives or the discussions that we are having around digitization, etc. That's number 2. Number 3 is, and that's the core of, and it's very important to bring that here, we are talking of the bottom of the pyramid. We are not talking about the poor. We are talking about the bottom of the pyramid, who are probably a shade or 2 layers below the so-called poor, which in my considered opinion is probably about 40% of the industry, of the country. So unless you are able to, somebody mentioned, I think you mentioned about the India versus Bharat, unless you are able to get them mainstream, in terms of be it the movement of money, or be it, we obviously do lending, because that's the pull, that's the easiest, to kind of latch onto and then kind of get them into the mainstream. So a normal person in the segment that we are dealing with, वो जो घर में अपने संदूक में या साड़ी में पैसे बांध के रखती है, if that is the customer we are talking about, how do we get that money into the, the formal channel of, the banking is what we are discussing. We are talking about a customer base where, forget digitization or even a smartphone, which was mentioned here, because this is like real bottom. They have feature phones, one in a family. The awareness levels aren't really what you would want to. So, so all those challenges are there. But to answer your question, unless we are able to penetrate this particular bottom of the pyramid through the services that we offer, India isn't going to, or the Bharat isn't going to move, and we will not be able to mainstream them into the, into the formal level of finance. What is absolutely critical is this is an aspirational India that we are talking about.
Sure.
They want to grow. They want to, when they see the chakachond of, the cities, obviously they want to join the party. Somewhere together as, because our customer is probably the recipient of all the people here on the channel and the various initiatives that are being taken. If we are able to address that with us somewhere in between, because we'll do the handshake, we are the last mile delivery. You know, if we are able to do it, it will be great, which includes the cost, which includes efficiency, which also includes the robustness and the trustworthiness of the system that we kind of work on. So, very, very critical for the Bharat to join mainstream, very critical that this is the only way, there is no other way, you know, because we can't, the industry itself has some 1.5 million employees working across 20,000 branches. But then how, I mean, you can't just keep on adding. Somewhere you to get this digital side somewhere integrated into the mainstream, and then you kind of then scale up. Very, very critical.
So Shalabh, maybe one follow-on question. So, you know, other than the benefits of operational efficiency, which obviously digitization brings, do you feel that this is something beneficial from a MFI business perspective beyond the cost reductions and, you know, obviously, you know, a lot more strength in the way you deliver a service? Is there something beyond that for an NBFC MFI from a business model perspective?
Oh, thank you for asking that question. I think it's a very important question. So there are two parts to the whole digital debate. The first is what you spoke about, which is operational efficiency. How do you onboard a customer efficiently? How do you service the customer on a tech platform and so on and so forth? The biggest or a much, you know, larger opportunity for the country is the credit decisioning part. You know, how do you identify a customer and to what level of dollar value do you need to take a punt on as far as the customer is concerned is the big one. Number two is this country slowly over a period of time is now a joined up country. You know, you have various money flowing into the customer. There's an AEPS, there's an Aadhaar stack, and you know, you are able, the Jandan accounts have been a great help. So what you do is you have some level of understanding of the customer, you know, in terms of, you know, the banking behavior, etc. So if through those patterns, if you are able to build a credit behavior and then decision, start small, you know, a 30,000 loan, which is what we give, and then take them up the ladder. I think that credit decisioning is extremely critical, for which you will have to analyze the behavior of the customer. There are enough data points. You just have to connect the dots, and if you are able to do that, you know, it's time, and I think, you know, it's the need of the hour.
Got. Thanks, Sanjib. So now I'm just going to move on to Sanjib and Amit, who, if I may say, so if I really look at it, you have two people who, if I may say, are the closest to the customer, and clearly in an India which is significantly underbanked and maybe not that savvy, you know, that personal touch, whether it is for the whether it is for the returns or for the actual lending and understanding the customer, you guys are coming up with, you know, sort of very dramatically different models. You're trying to work with banks. You guys are coming out with embedded finance products. How do you kind of see the conversation that both Shalabh and Mr. Kulkarni have spoken about? How do you see that changing? One, specifically from banks, because as Dr. Bakhshi said, they are the ones who are holding the money. What you're trying to do is kind of take out the entire chain and see whether you can reach the customer directly. You are trying to do a variety of other products and services to sit on top of this entire value chain. How does the world look like from your vantage point relative to the world that these people have been describing to us?
So Ram, I'll just intervene here for a minute, and you said the word underbanked. I just want to clarify on that. 80% of adults in the country today have a bank account. Right? We are seeing about 35% of those 50% of those 80% accounts where usage is low. So it's not underbanked as such, but I'm saying enabling usage is the key issue.
When I say underbanked, it's not necessarily having a bank account. It is access to a variety of financial services, whether it is liabilities, assets, insurance, a whole host of other things is the way maybe I define banking, not just, that's just, but maybe over to the two of you, from your vantage points, how do you see the world changing? Because clearly your business models presuppose that things are going to shift, not incrementally, but maybe in some quantum way.
Yeah, so Ram, thanks once again. Clearly, right, today if you heard the RBI gentleman in the morning as well, or today how the event is also called, it's called the Bharat Fintech, right? I think every possible audience over here and every one of us is overserved. The challenge is the bottom of the pyramid, or you come up to the real Bharat and all. Correct? Now, if you look at all the data sets, right, enough and more, 8 billion transactions happening on UPI, but if you go to the NPSCI site, you will realize that there are only 300 banks which are actually active on the UPI. And that also certified, not live. And if you flip over and check how many banks are there in this country, correct? There are more than 1,500 urban cooperative banks in the country, correct? And if you go further deep down, there are actually 1 lakh primary agricultural cooperative societies and over 8 lakh cooperative societies. Now the challenge is very simple. The 300 million customers are banking with them. So like as Dr. Bakhshi said, it is not a challenge of unbanked, it's their banked, but the repetition or the usage was poor. Largely, why was it poor? Because they were the law of the land. The bank was sitting over there. Anybody who needed something had to come to the bank. Mobile has actually broken that barrier, correct? Now, you and I don't go to the branch, but that poor guy has to go to the branch for everything. So what we've done is we've built a neo-banking application. We only provide it to the cooperative banks, integrated with your core banking. So now those consumers can perform all banking transactions in the mobile app itself. Started doing basic, simple, like checking balance itself was a big thing for them. Plus, we're taking a step ahead. We're giving them payments, insurance, investments, all those services. Now, the way we see it is the demand or the $5 trillion economy, we are not going to be supporting. Actually, it's these people who are going to support, correct? Whether it is digitization or whatever. I think all of us are done. We are peaked out, right? So the growth is largely going to come from there. Mobile has definitely played a big disruption. India Stack complements it. And all the public-private infrastructure is full supportive of it, correct? To the extent the government has gone ahead and launched its own Play Store to compete with the Google Play Stores and all of it. So I think from our vantage point, the demand is there. The consumers, like Sunil sir and Dr. Bakhshi also said, they are already there on the same Amazon, Flipkart, Netflix, Instagram, like you and me. It is just the Google Pay has done them, paved the path. I think we are quite excited about this space. We've activated over 100 of them sitting at home, so looks good.
Right. So are you seeing incremental uptake from customers who are transitioning from, say, you know, the old kind of small phones to, are you seeing rapid uptick, not from people just moving to this app from some other app, maybe from some bigger bank, or are you seeing new customers who hitherto never did any of this, but maybe their son now maybe goes to some small town to do, and he has an app, and are you seeing that uptick? Because that is really what is going to change things. The old person who's already maybe 55, 60, he will continue to remain with his feature phone and all of that. But the new market which is now emerging, is that something that you are seeing a big traction on?
Yeah, so that's one big challenge I have. Whenever we talk of Bharat, right, we always talk of a 55-year-old villager smoking bidi in a low town which nobody has seen light.
Yeah.
Correct? Bharat is outside this hotel as well.
Yeah.
Now, what is funny is when we go to the vegetable market or we go to a cigarette shop or a chai fellow, correct? When we do a scan and pay, we take great pride that we did a digital payment. Yeah. Have you seen the QR code on the other side? Yeah. It's a Yes Bank or a Ratnakar or an Axis. Yeah. Do you think that guy is a Yes Bank customer? Yeah. If tomorrow his 13 rupees is stuck, can he walk into a Yes Bank and ask for money? No, he's not a Yes Bank customer. Right. It is just that his cooperative or smaller bank was not providing him this service, hence he was force-fitted over there. So what we've seen a huge migration back, people removing those Google Pay, Phone Pay stickers and taking their bank. Because even for you and me, trust is where the money is, correct? We can be all fintech players, the money remains at the bank. So we are first influencing those. With this, what is happening is the guy who never thought of opening a bank account with his cooperative because he thought he doesn't have it, we are seeing an influx there.
Sanjib, over to you.
So in all our conversations, we were talking about on one side we have a bank and the other side there is a customer. Yeah. Now, in order for efficient banking to happen, there has to be desirability on both sides. Yeah. The customer has to be willing to open an account because just government doing a regulations that, okay, we will open 70 crore accounts. That doesn't make everybody banked. And also the desirability on the part of banks to service a customer. So today, the majority of the rural customers, a majority of the customers who we consider today who need financial inclusion, there is no desirability with the banks to even onboard them as a customer. You go to the Axis banks or the leading private banks, even the leading PSU banks, they consider them to be as a cost center. Right. And on the customer side, the problem is they are now having a physical touch point with the branches. and directly getting them to migrate to a digital, there has to be an intermediate journey in between, which we consider to be phygital. That is where the BCs and all this infrastructure comes in, where it's a digital transaction, but the customer doesn't directly do it. The customer goes to somebody who assists them to do it. So unless we solve the desirability on both sides, we cannot solve this problem. And the easiest way to solve this desirability, why is it that a typical bank doesn't want somebody who doesn't have a bigger float, who will not keep a bigger float in the account, to have them as a customer? Because the cost of holding an account or servicing a customer for a year is about 700 rupees today, which is CBS cost plus the minimum number of transactions that you have to do on the interchange fees on that, on your card and APS and everything. And so unless that cost comes down, there will be no desirability with the banks to go and onboard these people who actually need banking as their customers. And unless we get these digital interfaces as much closer to the comfort zone of these customers, we cannot encourage customers to just find a wake up and start downloading an app and doing transactions. So this transition phase, which every one of us on this panel, and there are thousands who are also working with us and very alike to us. Like, we are trying to solve it through technology, somebody is trying to solve it through field force deployments, there are people who are educating and doing it. The banks are working very hard in upgrading their technology, trying to minimize and reduce the cost of transactions. So there are a lot of factors that are playing in, who only when comes and plays in tandem, we can reduce the cost of servicing a customer, we can increase the penetration and reach of these phygital channels, and then we will see digital. And only when we see digital, there will be data that will be generated, and when we can generate that kind of qualitative data, then we will have people like Shalabh who will go and probably provide that full stack, not just account holding, a value storage, but also credit engine, credit decisioning, insurance underwriting, the whole full financial loop, and which helps the customer and be really financially included.
So maybe what I'm going to do now is I'm just going to, taking away from what you're saying, Sanjib, the whole concept that, those smaller customers may not really be reaching that level of even a break-even or a profitability. So naturally, the CFO or the business pressure is going to be there to cross-sell, new product sale, like whatever. I mean, maybe an EMI is too far away, but some small insurance kind of, wrap or whatever it is. And maybe I'll just open it up now for everyone here. In terms of, what kind of risks does a lot of this digitization carry? Because it has a certain, sort of coldness, because, the product is there and I'm here, I click a few things, I bought a product, right? I can purchase an EMI product today by just clicking a few things. The earlier traditional model is you have somebody trusted, whether it is an NBFC MFI, he's been in your village for 5 years, or I know you for 10 years. Here it's all going to be a lot more, clinical. What kind of risks does something like this carry? More from a political, legal, or compliance, or RBI regulation, because that is a major space. There are huge benefits to this, but the reality when really something hits the ceiling, someone's going to come down with a ton of bricks saying, someone missold something else, or someone tried to make money. And we've seen this historically, Shalabh. I mean, whether we look at the MFI crisis, eventually someone becomes a sort of a person who's going to be caught and said, you are the one who made the mistake. There may be so many other things happening. There are local challenges which we all know in some of these businesses. How do you see that part? Because that becomes so important, even for supposedly sophisticated people like us. Sometimes when we buy products, there are lots of people who will say, I want to buy insurance, and that will be already ticked. So it's an option for me that I have to untick. When even for a so-called sophisticated customer, for me, it is so subtle. This represents a real risk from a larger franchise branding optics perspective, especially from a political perspective, and we have seen this time and again over the last 25, 30 years. How do we really see this, especially in this entire digital space? Because the tsunami can hit very fast. Let's say, in some district, some 100,000 people bought something, it just becomes something that just blows up beyond proportion. So maybe this is something open for all of you to maybe speak about, because I do see this as something which is a real risk for the sector.
So just before we walk onto this, I just wanted to make a small point. For this entire 30-40% of the country that we are talking about, intermediary is very, very necessary to kind of help them walk the bridge. It could be a BC, it could be NBFC, it could be whatever, number one. Number two is, what is very, very critical is that there has to be a responsible intermediary who will not play around, because this can flip over. And there are various, you would have noticed, you would have read about it, the BCs or the individuals kind of playing around. Ultimately, you are dealing with a customer who is less aware. I'm not saying, they are not literate or whatever. But the fact of the matter is, they are not very comfortable with a lot of technology at this point in time. At some stage, 3 years, 4 years, 5 years, whenever it happens, they will. But now there's a distance to be traveled. Hence, extremely important that there is some bit of responsibleness associated with the people who are delivering these services. I don't want to call it regulation or, you regulate them or whatever, but then, that's very, very critical. The third, which I wanted to emphasize on, is that unless they are never, the banks are not going to open another 50,000 branches, all put together, the whatever 30, 40,000 branches. So the last mile has to be delivered for the complexity of the country that we are dealing with, has to be delivered by an intermediary. For that to happen, you have to have the tech stack for which from a credit decisioning to the operational, the way you carry out is very, very critical. So while we'll walk that path, the risk will always be there. You have to keep on controlling because there's no other option. You can't leave them out.
Right.
So you have to walk that path, ensure that, wherever such instances happen, there were reports in terms of people kind of, ultimately you just need an angutha to withdraw money, all
Correct.
said and done.
Correct.
So, which has its own, and they wouldn't know.
Yeah.
You can always say that the transaction fail ho gaya.
Yeah.
But, so all
Correct.
those things are there.
Correct.
You just have to be very, very strong and strict, and hence it requires a prudent and a responsible intermediary.
Right.
That's the point I wanted to make.
Dr. Bakhshi, any thoughts from you on this particular thing?
Yeah, well, a lot of them actually. But I'm going to stay a bit sharp. So I just want us to step back a little bit and go back a couple of years. And we'll realize that how the world is changing, right? So in the, in the olden days, and I'm not saying olden, it could be even the early 2000s, when the regulation came first and the products came after that.
Yeah.
Now, technology has gone and leapfrogged.
Absolutely.
And the regulation is playing the role of catch-up.
Catch-up. Absolutely.
Right? Which is the reason that RBI has a sandbox, RBI Innovation Hub has a sandbox, and they're trying to do stuff, all the regulators are trying to do stuff, and playing a catch-up on what does it actually mean. Right? Now, that's a very important aspect, because when we do a leapfrog on technology, it is an ethical issue as a business team and a technical team that we decide what we really want to do.
Yeah.
And how it's going to impact the people that we're trying to serve. Hence, as Shalabh said about responsible. So responsibility lies with the regulator or lies with the businesses.
Right.
That's a question to solve for.
Right.
Well, the regulator says that you should be very sure of how the customer and her money is protected.
Right.
If the businesses want to go and ramp up very quickly, very fast and get to scale, so there is always this other kind of contradiction. But in that contradiction, what is very important is, does the customer have the transparency of what you're trying to do?
Yeah.
Does she know what she'll be charged for or paying for? And does she have a recourse to when something goes wrong? Right? So all of these are underlying factors of building trust. Right? And if you see, trust has many levels of what I call as manifestation, and transparency and pricing and customer protection and grievance redress, a lot of part of that, right? Including communication and awareness and all that stuff. We've not seen that happening as much.
Yeah. Yeah.
I think what we need to do is to see, because I was recently in a village in Bihar where I was speaking to one of the women who's a farmer, and she puts her feature phone in a plastic bag and ties it into her sari, and I was asking her, what did she do it? Her only question was, will I lose my money?
Right.
If you can address that question,
Right.
it's really good. I think the other question which we should all as an industry ponder about is that is customer protection an angle of compliance?
Right.
Or it's a competitive advantage?
Right.
It drives revenues, right? If we are able to sort that out, and customer protection is inbuilt into your product. So as an example, we talk about customer complaints, right? How do we even define a customer complaint? If the customer has to call you to ask for the details of the product, that itself is a complaint.
Right.
It's badly designed product, right? So I think we need to go down to that level. But let me also tell you that the customers we are talking about, and he's talking about at the bottom, they're very sophisticated customers. They understand the space of money. They understand what trade-offs to make. They understand how to save. They're very, they are much smarter than I am in my money management, right? So they aren't fools.
Yeah.
I think what they need is a compelling value proposition for them to be able to enter the space and do it well. Nobody taught people how to make a phone call.
Yeah.
It's technology end of the day. But they all learned.
Yeah.
Why did they learn? There was a very strong reason for them to transact on the phone.
Yeah.
So if there is a compelling reason, they will come on. But we need to be sure that we are ready for them to serve them when they do come on board.
Got it.
I'm going to stop here.
Thoughts from some of the others?
I have a small thought on this.
Yeah, please.
Small observation, actually. So today, if you look at the BC space, a typical customer service point, the interchange they earn, the maximum interchange they earn on a certain transaction is 15 rupees, and which actually boils down that the individual will be about 9 to 10 rupees. But it is known fact, it is open secret that nobody does this service at 9 rupees. They charge something extra to the customer, and the customers are happy to pay it.
Yeah.
So when the customer realizes they're getting some value out of it, even if the commercial is not declared, they're happy to pay it. The problem is when something is not declared, they do not extract value out of it, and they're made to pay. And often this kind of transactions, this kind of leakage are in huge scale, where it could snowball, are by organizations which are large in scale.
Yeah.
And it is easy to control with regulatory measures, with regulatory measures and also legal measures to control these large scale organizations who can create such problems, which can snowball to be detrimental to the industry.
Yeah. Yeah. Some last thoughts from both of you?
Yeah. Time check?
We have just about 3-4 minutes left.
Yeah. So I'll be quick then.
Yeah.
What is happening is, as we speak, the technology is also taking care of some of the risks that are being talked about. For example, UPI was one example I'll give, because there are 2 billion transactions happening. The failure rate, even if it is a very small fraction, it is several hundred million transactions which are failing, which is okay so far an online customer. He knows, he gets a information that, you will get refund through 2 or 3 days. But for a physical face-to-face transaction, that's a big problem. And that's why UPI Lite has been brought. So UPI Lite is 200 rupee, below 200 rupee offline transaction. The next would be beyond 200 rupees CBDC, which will bring that. Account aggregator, assisted account aggregator. ONDC, assisted buyer app. So for each of these, you will have somebody who is next to you who will take care of that, and a proximity transaction is less risky. I'm not saying zero risk, is less risky than an online transaction.
No doubt.
For these people.
No doubt. Please.
I think, like Dr. Bakhshi and these people also highlighted, right? Technology moved a little forward, and then regulation came in. Moving, if you see the Payments Act, it was 2007, and now suddenly we have a whole payment aggregator license and everything, correct? There was the entire lending infrastructure, and then BNPL came in and stuff like it, correct? So I think what we're now seeing is there's a lot more hand in glove, and they are also forward thinking. They are more open, they're talking. So I think more than the risk, I think it complements both. So I think if regulation and technology continue to grow, that's the only way Bharat will survive. So,
Right. Great. So I think just coming to the end of maybe what we will do, I'm sorry, I'm just going to extend. I think we will want to take maybe one question from the audience. One question. Yeah, sorry. Yeah.
My single question is, we keep on debating about how do we address this Bharat issue. And the only thing that, in my opinion, the answer is that digital literacy. Because I'm struggling with my maid servant in Mumbai, who has an account with a nationalized bank for so many years. to get her to do a digital transaction.
Yeah.
And none of the ecosystem players are even bothering to really educate that person.
Yeah.
Unless that is done, we can have a debate till the cows come home.
Got it. Got it. No, I think that's a great point. Obviously, I'm sure all of us agree that, the whole issue of literacy is so critical. But maybe in the interest of time, I just want to kind of conclude this conversation to say that, broadly there are two themes. One is really that technology can bring huge amounts of efficiency. It can really reduce costs pretty substantially, make things far more efficient, and enable us to reach markets that hitherto pure play physical would never be able to reach. At the same time, given the nature of the customer, especially in those segments, I think embedding safeguards, whether it is from a regulatory perspective or a product perspective, and ensuring, at least in the next few years, till customers get more sophisticated, some kind of physical infrastructure, whether it is in the form of BC or an NBFC, MFI or another business organization, is very critical for us to ensure that this growth in inclusion in this new paradigm is more regulated, is more systematic, because nothing is worse than a regulatory blowout because of something, because that takes the industry, and I'm sure many of us here have seen that the industry goes back 4 or 5 years and then you kind of build out all over again. I don't think that this country is able to afford that anymore. So I would just sort of leave that broad thought that I think investments in literacy and designing products with this kind of physical plus digital in some fashion, I think is really what's the need of the hour. I just want to thank everyone here. I think this has been a great conversation. I wish we had a lot more time, but I think, we are completely out of time. So thank you everyone, and it's really been a pleasure here discussing with all of you on this very, very important topic. Thank you so much.